G'day, this is Jason here from Divergence Trading 101. Let's look at the setups of today. Okay, we're looking at the NASDAQ 5-minute. You can see that double top up there, eh? Double top and wickers. Yeah. There's a lot of counter trend traders who would that's what they'd be waiting for price to come back in here and sell it all the way back down here. That's what they're probably going to do today. Anyway, that's the fair value gap. The fair value gap traders. I don't know. I just call it resistance myself. Anyway, let's look for some divergence now. Okay. So we got here to here. It's a low and a lower low. And right here to right here. That one's going down. That one's going up. That's divergence. The question is, I didn't do this trade today. And then after it all happens, you wish you would have, right? I've seen the divergence, but you know what stopped me? This and this. That's what freaking stopped me from getting in the trade, and I missed the beautiful run up. And I still, like, I didn't want to buy the dip here. Well, I didn't want to buy the dip here, or the first entry is on the opening of this candle. I didn't want to buy the dip here because they sold it off of here. See? Right back down to here. So I didn't do the trade again. Then I took off up. And then I took off up. And see right here, I didn't want to buy the dip here either because it bounced off the 14,900. Look at it coming down now. I bet you it's going to crash all the way back down here. Then it pushed higher. And I sat here and watched it all the way from down here. 5, 10, 15, 20, 25, 30, 35, 40 minutes. I never did the trade. I gave up on it after that. I said, not touching it. Anyway, these mothers right here. Resistance and strong resistance. It's like it wasn't just one time it went there and sold off. It went there twice and sold off. That's why you're kind of, I was kind of hesitant to do the trade. As simple as that. Here's the entry right here. Not that I'm saying to do anything. That's a double top if I ever did see one, and maybe it'll go back down here. Maybe they'll buy it back up off the pivot, or maybe they'll take it down to here again and take it up. You see what they did here? Look, let me show you. To a T. Okay? What did they buy off of? 50% Fibonacci, right back up. 50%. The 50% Fibo is very popular in futures instruments. In Forex, not so much. In Forex, the 38.2 and the 61.8 are the favorite Fibos. Okay, let me delete that. Didn't mean to get into the Fibos today, but I just thought I'd throw in some more information that I learned along my long journey of 22 years. And I learned that from a guy, he used to call himself all-time loser, but really he was the opposite. It was really funny back in those days. That was in 2007, 2008. I think it was 2007. Yeah. He is from Lebanon. His name was Paul, but he called himself all-time loser. He used to trade the euro and trade the retracements. Every time the euro, like if the move was up like this and the price was still up here, they would sell it to the 38.2 and take their profit. If the market crashed down during the day, the Euro USD, they would buy down here and take it up to the 38.2. And they used to do it like every day, like clockwork. It was really weird. And then it stopped. When the crisis happened in Europe, I'm just telling you a little story here. It didn't retrace anymore. Well, it retraced a little bit, and then it kept going. So then they had to let that strategy go because that serious situation in Greece, screwed it all up. Look at that. It's going back up. See? I do a call, and then they buy it back up, the bastards. You bastards. Okay, let's move on to the Dow. Look at this Dow, eh? Wow, head and shoulders. Look at all them wicks there, eh? But anyway. Sorry, I just got to straighten this up a little bit here. Okay. We have low and lower lows, just like on the NASDAQ. And we got the low valley here with the higher valley. So, you would have got in long right in here. Somewhere just above that wick, somewhere in there. If you would have got in, your stop would have been 55 points, and it went up 112, 121. You got your 2 to 1. Now, up here, no. Oh, I forgot to show you yet. Let me go back. I'm sorry. I forgot to show you this on the 1 minute, how beautiful it is. Let me just show you. Okay. So there's divergence here, okay? So there was divergence just like on the 5 minute, like here, low and lower low, like that. You can see it right there. See it? Boom. And up it goes. Right here would have been the entry, right here. That's 2 minutes into the open of the stock market, and up it went. Okay? Went up like 100. Then setup number 2, I want to just show you. You should be trading the 1 minute these days, not the 5. Let's just put it to there. Okay? And we got it from here right up to here. You would have put that. I would have put the arrow there. And that would have been right at, close to resistance there of today. It would have been at the top of the chart when this setup happened. So you would have got long right here. Your stop would have been 18 points. And it went up 63 points. There's your 3 to 1 win-loss ratio. Now, what did we have here? Just like what did we have here? I'll show you. Double top. Just like that. You would have got short right in here. Went down 60 points. Now, what do you see here? I know what you see. Look at this W. Let me show you. That's a W. Have you ever traded M's and W's? Have you? Okay. Right here. This is the letter M. That means to sell. And this is the letter W. That means to buy. Okay. Let me clear the chart here. It's gotten full of too much stuff. All right. Put the candles back on. We got that all cleared up. Yeah, all cleared up. Okay. So we had a W. We had a double bottom, is what we had. Get long in here, and up it goes. Another 60 pips. 60 pips, 60 pip points, 60 points. That's 3 times 6, 180 points right in here. Oh, yeah. Then we got to sell again. Double top right here. Double top, don't stop. Is it perfect? No. It's good enough, though. Right here. Yeah. La-di-da. Yeah. Boom. Sell right there. Sold right there. You had support here. It went down to the pivot, 23 points. And then now, is there divergence here? Doesn't look like it. Oh, but there is. There is. Oh, what are you trying to do to me, little dot? Make a dot. All right. Right here. Right there. Right there. I'm trying to find the spot here. And right here. This one is going up. This one is going down. You got a bot right there. Crazy setups today. We should all be millionaires. Right here. Buy it. Stop was 18 points. Went up 25 points. There. That's the only one I'm going to show you. Okay. Had to get rid of the loogie boogies here. Freaking sticking to my vocal cords. Holy shit, I couldn't talk. I got it out now. I got it unstuck. And it's good. Okay, that's the 1 minute. That's all the setups today. It's just unbelievable. Unbelievable. Now it's going to go to a new high finally. Now finally you're going to go up, you skank. Yeah. And the Dow, yeah, you bought here, up it went. Then we had like nothing. We had nothing. Well, no, we had something. If you really want to sit here and look, I guess I saved that template where that's way over there. Okay. So, let me get through these pairs. I'm sorry. I hope everything I try and show you here, you're learning stuff. That's all I can say. I want to share my knowledge with the traders. So if I pass on one day soon, I'll live on through my videos showing people how to trade divergence. So it would have got in somewhere in there. Okay, this is the Dow. It's already gone up 35 points, and the stop would have been like down here, 62. So it needs to go back up to here. Not much more. Not much more. Okay, let's look at the S&P. Oh, we love the VWAP today. We like the VWAP. Yeah, indeed. This is double bottom here. Let me show you. Let me just clear the chart. There, we got rid of the VWAP. I have no use for the VWAP myself. I'm not saying it doesn't work for other people. It possibly could. I have my lines in the sand, my moving averages. They're these two. It's this one. Let me show you. The 5 exponential close. Okay? If you can't remember that quick, just stop the video now and look at this and set up your moving average. That was the white line, dash line. Now this line is the 7 EMA close shift 1. Very important. You do the shift 1, okay? And if you didn't catch this so far yet, stop the video and look at the settings and set up your moving averages, okay? Okay, and I'll press okay. Okay. What are we looking at here? We're looking at S&P 500. She's rallying up now. The damn, the NASDAQ must be running now. Oh, yeah, of course. Right back up to 15,000. You bastards. New Jersey. Yeah, New Jersey, my ass. I'm not going to answer the phone. I don't know anybody in New Jersey. I'm from Canada, for shit's sake. Okay. There we go. Same setups. This is basically double bottom. Yeah, I just hang up on those people. Those American scammers that are trying to scam me. You ain't scamming me, you motherfuckers. There's lots of Canadian scammers too, but not as many as in the United States. They got like 10 times, 9 times more the population than we do. Anyway, okay. Get back with this. Get this done, Jason. People got things to do. Okay, right here. We're going to buy right here. That's where we'd buy. Or put our stop right down here. 68 point, or no, 7 points. Here's the 8 points right here. If you bought this dip right here, doo-dah, zoom, up we go. And then we had one more trade. Let me show you right here. Boom, boom. And right here. Wherever it goes. It's saying right there. Trust me, it's divergent. This one's going up, this one's going down, even though it doesn't perfectly line up. Whatever. Whatever, man. Whatever. Okay. Right here. Buy right here. Went up 9.5 points. Okay. With a stop of 8.5 points. So you got your 1-to-1 win-loss ratio. Let's move on now. We're moving on to crude oil. Yes, indeed. Crude oil, ladies and gents, right here, at $71 a barrel. We're going to draw a line up to $71.50. Just like that. Just like that. Yeah, yeah. And we're going to take it from here to here. Yeah. And our entry was very simple and easy to see. This is the opening. That's why you see a big long wick there. So you would have sold it right here. Stop would have been very little, 22 tickers. And it went down 100. So that's like 4-to-1 win-loss ratio. Or RR. You can call it RR. Have you ever been to Sea Belly? RR. I don't call it RR, risk reward, but it is. I should I should learn to say that. It's a lot easier than saying risk reward ratio. You know what I mean? Anyway, that was a winner, Forex right there. Okay? And then we had another one. Right? Right here to right here. Take it from here to here, wherever it goes. And even after the spike down, you would have, boom, sold it right there. And in 5 minutes, it went down 72 points. All right. Let's see pound yen now. Oh, pound yen not looking good. Oh. Well, we had like a 5x. 1, 2, 3. 4x bottom here. 4x 4 times. Here we go, like this. And would have bought it right there. And it went up 65 points. Yeah, and our stop would have been here. 48 points. Got your 1-to-1. Let's look at the euro yen. Oh, same thing maybe? Oh, no. Low and lower low, but no. Not there. No divergence there. And none here either. Wow. There's some up here, but the day's over. Okay, screw you. All right, okay, we're looking at gold now. XAU, USD. Do we see the setup? Oh, I do. It's not here. It's not a double top because this mountain's higher than this one. However, price came down. If you wanted to trade the cross, it would have been iffy because it would be bouncing off this support right here, but then they took it back up and whammed it down, rammed her down. 70 points, they rammed it down. But here's the real trade that we would have done. Higher mountain peak to lower mountain peak. This one's going down, this one's going up. Hard to see divergence is what I call it. Hidden divergence. Yeah. 65. All the way down. It went down like 95 points on gold. Would have been good, would have been sweet. All right. Let's look at the last instrument of the day. Pound dollar. And what a freaking mess the pound dollar was today. No. Because this little doodahs are taller than this little tiny doodah right here, if you can see it. So there was no sell right here, other than it looks like a divergence setup. See, hidden divergence, high and higher high like that. But here, you know, it's going up, not down. Let's just say for sake of being a trader, we've seen it strong. These are railroad tracks here where it rallies up and then it runs back down and it engulfs the run-up candle a little bit. Train tracks. Choo-choo. Choo-choo. Okay, you would have sold underneath these wicks right here. And down it went. Down it went. 38 points on the pound dollar. That's about the only trade I see, ladies and gents. If you would have counted this, I don't know. I looked at it and I didn't want to trade it. You know, kind of like a double bottom, kind of like, minus the spike. Like if we go to the 15-minute, see, it's just a wick. See, that's what I thought it would be. Okay, and right here, like this, and here's the last arrow of the day. Would have bought it there. And where did it go? Not very far. It went up like 14 lousy pips. And now it's just grinding sideways. So anyway, once again, my name's Jason Sweezy. I trade divergence and only divergence because I believe it's the best strategy. Just want to say thanks for listening. Thanks for watching. And please give a like. I would appreciate it. And if you're not subscribed yet, please subscribe. I would appreciate that too. Thanks for watching. Good luck and good trading. We'll see you tomorrow on Friday.